In the realm of global finance, few narratives have been as enthralling and promising as the tale of India's banking system. Now, against a backdrop of rapid economic growth and technological advancement, the Indian banking system has emerged as a dynamic force driving the nation's progress and fostering financial stability. But was this the case always? Now, at the heart of this success story lies the Reserve Bank of India, which is the guiding compass of India's financial landscape, whose financial stability report offers a compelling glimpse into the flourishing ecosystem. Now, in today's episode of The Third Empire, we dive deeper to understand how India's banking system has evolved over the years to become the beacon of growth for the Indian economy. We will also look at what's working and what's concerning in the Indian banking ecosystem as we delve into the intriguing narrative provided by the Financial Stability Report. Now, while we do that, we will also talk about one new interesting sector which has been emerging as a force to be reckoned. Now, this particular sector has transformed our country from being a nation with humble beginnings to reaching newer heights, propelling India into a league of coveted nations having a presence in this space. Now, with its visionary approach, technological prowess, and ambitious missions, India has carved out a remarkable praise for itself in this particular sector. Want to know which sector am I referring to? Stay tuned. You're watching Informed Investor, The Third Empire, an initiative by Research and Ranking. Let's begin. Have you observed the popularity of the banking sector among direct equity investors? Both experts and investors have been favoring stocks from this sector, and these stocks have been performing exceptionally well, surpassing not only the benchmark Nifty but also many other sectoral indices. Now, on the other hand, the global economy is currently facing uncertainties such as issues in the banking system of major countries, geopolitical tensions, and the moderately high inflation. However, here's the positive news. Despite this global macroeconomic backdrop, the Indian economy and its domestic financial system remain strong and resilient. Now, we possess such strong macroeconomic fundamentals, including consistent economic growth, controlled inflation, and a reduced current account deficit and increasing foreign exchange reserves. We are also effectively managing our fiscal situation, and our financial system is robust. All of these factors are positioning us for sustained and continued growth. But what's behind the rally in the banking stocks, you may ask? Now, maintaining low levels of non-performing assets or NPAs is a crucial factor for the efficient functioning of the banking sector. In India, over the past decade, the banking system had faced challenges with the NPAs, particularly amongst public sector banks. Now, these banks extended loans to infrastructure projects, particularly in sectors such as electricity, steel, and telecommunication. Now, in their pursuit of demonstrating high loan growth, proper due diligence took a backseat and many cases lacked thorough assessments. Instead, the banks relied on the feasibility reports provided by the project promoters themselves, neglecting their own evaluations. Now, to exacerbate the situation, during the 2008 financial crisis, the RBI, or the Reserve Bank of India, permitted banks to restructure loans and not classify them as NPAs. Initially intended as a temporary measure to assist banks during difficult times, this provision was extended for a period of 10 long years. Now, consequently, unrecognized NPAs accumulated within the banking system. Now, recognizing the gravity of this situation, the RBI conducted special inspections between August and November 2015 and introduces the Asset Quality Review mechanism, which compelled banks to acknowledge their NPAs. Once recognized, banks were required to make provisions for these bad loans. Now, in essence, banks were compelled to address their burden of bad loans, allowing them to focus on assets that could generate genuine income. Now, thanks to these measures, the asset quality of banks has shown improvement, and the gross non-performing assets, which reached their peak in FY18, have been steadily declining since then. Now, the recent market rally can largely be attributed to this enhanced asset quality within the banking system. Now, coming to the RBI's stability report. The Reserve Bank of India releases the Financial Stability Report to keep track of the systematic risks in the country's financial landscape. These reports provide a panoramic view and not only assess how the financial intermediaries and markets are performing, but also evaluate how they would fare under adverse stress conditions. Now, according to the latest financial stability report from the RBI, the state of the domestic banking system, as measured by the Banking Stability Indicator, has improved significantly. Now, during the second half of the fiscal FY23, the soundness of the banking sector has strengthened, with capital buffers reaching all-time highs. One particularly encouraging aspect in the improvement in the asset quality of the Indian banking system is the bank's gross non-performing assets, which I've already spoken about, which have decreased to a 10-year low of 3.9% as of March 2023. Now, this positive trend is observed in both the public as well as the private sector banks and in the major sectors of the economy as well. Now, additionally, the report highlights that unsecured retail loans constitute only 7.9% of the total credit. Now, in the banking system, furthermore, their asset quality has improved as indicated by the decline in the gross non-performing asset ratio from 3.2% to 2.0% during the mentioned period. Considering all of these factors, it is reassuring to note that despite some signs of potential stress in the retail loans, they do not pose an immediate risk to the stability of the overall financial system. Now, the macro stress test for the credit risk reveal that scheduled commercial banks are well capitalized and all banks would be able to comply with the minimum capital requirements. The provision coverage ratio, or the PCR, is the measure that indicates how well banks are prepared to handle potential losses from their loans. Now, it shows that the percentage of bad loans or the non-performing assets that a bank has set aside provisions for. Over the past 4 quarters, the provision coverage ratio has been steadily improving, which means that the banks are becoming more cautious and setting aside more money to cover the potential losses from the bad loans. Currently, the PCR stands at 74%. When we look at the different types of banks, both private banks and the public sector banks have similar PCR levels, meaning they are converging towards the average. This indicates that both the private banks and the public sector banks are taking steps to strengthen their provisions and manage potential risks associated with bad loans. Alongside these positive developments, there has been a steady improvement in the key financial parameters of the corporate sector. Private non-financial companies in particular have successfully reduced their debt to equity ratios and have witnessed an enhancement in their debt servicing capacity. Healthier balance sheets are catalyzing sustained and broad-based pickup in the momentum of credit growth, with credit flow improving to all sectors of the economy. Deposit growth has also been catching up with credit growth. Bank deposits grew by 10% year on year in FY23 and improved to 11.8% in early June 2023, partly aided by the announcement of the withdrawal of the 2000 rupee notes from circulation. Although the deposits have trailed the rate of credit expansion, the structural liquidity mismatch has been narrowing, and the annual incremental credit deposit ratio has come down from its recent peak of 141.8% in November 2022 to 94.7% in June of 2023. The financial system in India, with its strong banking sector at the forefront, continues to remain stable and plays a crucial role in supporting the productivity needs of the country. The banks in India have shown resilience and are well prepared to meet the demands of the credit cycle that has been experiencing an upturn since 2022. One of the key factors contributing to the stability of the Indian financial system is the robust earnings of the banks. Banks have been generating healthy profits, which not only enhance their financial strength but also provide them with necessary resources to support economic growth through lending and other financial services. In addition to strong earnings, banks in India maintain adequate capital and liquidity buffers. Capital acts as a cushion to absorb losses and ensures the stability of the banking system. With sufficient capital, banks are better equipped to navigate through challenging times and maintain the flow of credit to the economy. Similarly, maintaining adequate liquidity ensures that banks have the necessary funds to meet their obligations and support the need of depositors and the borrowers. Moreover, there has been a notable improvement in the asset quality of the Indian banks. This means that the proportion of the non-performing assets or the bad loans has been increasing. Now, as banks continue to address and resolve the issue of NPAs, it strengthens their balance sheets and enhances their ability to lend to productive sectors of the economy. With robust earnings, adequate capital and liquidity buffers, and improving asset quality, Indian banks are well positioned to sustain the ongoing upturn in the credit cycle. This is crucial for supporting economic growth, as access to credit is essential for businesses to invest, expand, and create employment opportunities. India has become a rapidly growing hub for startups, offering a conducive environment supported by factors such as a large consumer market, a skilled technical workforce, improving infrastructure, and government initiatives. However, within this thriving startup ecosystem, a particularly noteworthy sector has emerged, and that is the Indian space industry. Now, despite its humble beginnings as a financially struggling nation that launched its first rocket in the year 1963, India has now established itself as one of the top 5 countries in terms of space exploration. Now, the country offers numerous opportunities in the realm of space, particularly known for its production of affordable satellites and launch vehicles. Now, despite these achievements, India's space sector contributes only 2.1% to the global space economy, indicating the vast untapped potential that it holds. Now, the significance of the Indian space industry lies in its ability to enable services and applications across various sectors. These include media and entertainment, weather forecasting, disaster management, agricultural, geological and oceanographic studies, navigation, broadband studies, and remote sensing. This demonstrates the crucial role that the space sector plays in facilitating advancements in diverse industries and underscores its overall importance. Now, talking about the opportunities in the Indian space sector, in 2020, India's contribution to the global space industry economy was 2.1%, which is equivalent to about 9.6 billion US dollars, and accounted only for 0.4% of the country's GDP. Although the contribution may seem relatively small, the growth potential for India in this sector is immense. To gain a better understanding of the space industry, it can be divided into 4 verticals. 1 is the satellite manufacturing, 2 is the launch services, 3 is the satellite services, and 4 are the ground segments. Now, all of these verticals have shown a compound annual growth rate, or the CAGR, ranging from 4% to 13%. This signifies the potential for the substantial growth within each area. Now, an interesting aspect of the Indian space sector is that it has become highly attractive to venture capitalists. This is primarily due to the significant market that exists for space-related services. When the pandemic began, there were only 5 space tech startups in India. However, the number has now grown to 140 registered startups, highlighting the vast opportunities and the potential for growth in this sector. Now, when discussing space exploration, the Indian Space Research Organization, or ISRO, is the first name that comes to mind. The majority of India's space industry is driven by ISRO, which is a national agency. In India, the space sector has largely been under the control of the government, with ISRO serving as the primary service provider focused on constructing rockets and satellites. On the other hand, the private sector's involvement has primarily been in the form of providing specific manufacturing tasks or outsourced manpower in the Tier 2, Tier 3 vendor category. Now, an intriguing fact is that ISRO's spaceport in Sriharikota, Andhra Pradesh, is located near the equator, making it suitable for launching satellites into various orbital levels. Additionally, the PSLV rocket, which is ISRO's workhorse rocket, is renowned for its reliability in carrying heavy loads. With an impressive success rate of nearly 95%, it has significantly reduced satellite insurance costs, positioning India as one of the most competitive launch sites globally. Now, what makes this event more interesting is that ISRO shares this profitable legacy with private players, creating an ecosystem that drives growth for the entire space sector. Now, in the past decade, there has been a significant increase in space missions, and as a result, private companies have emerged as full-scale manufacturers of satellites and launch vehicles. These private players have begun servicing smaller commercial purposes, such as providing phone signals in remote areas, supporting the operation of solar farms, and enabling commercial fishing fleets to track their catch. Furthermore, investments in Indian space budget startups have seen a remarkable surge, reaching $108.5 million in 2022. This represents a substantial increase of over 59% compared to the year before that. Now, the entry of private players into the space industry will contribute to its competitiveness. The availability of low-cost satellite launch vehicles combined with mass production capabilities will generate demand from customers worldwide. Indian private companies are actively seeking to exploit the space industry by leveraging innovative technologies. Moreover, the number of new space startups in India has experienced tremendous growth. In 2019, there were only a few startups, but this number has now increased. Furthermore, it is projected that by the year 2023, the total number of startups in this sector will reach 140, showcasing the growing dominance and significance of the space industry in India. The government of India's commitment to the development of the space industry is evident through the upward trajectory of budget allocation. In FY23, the government allocated $1.65 billion to the Indian space budget, which is a significant increase from the $1.14 billion allocated in FY21. Now, this rise in budgetary provisions, along with increased foreign direct investments and government expenditures, will provide a boost to the Indian space industry and stimulate growth in the private sector. Now, at SpaceX, the company owned by Elon Musk, has significantly reduced the cost of launching heavy objects into the orbit, making it challenging for India to catch up. India does have a strategic advantage. India's advantage lies in its geopolitical positioning. Other countries that have offered lower cost options for launches are Russia and China. However, Russia's recent invasion of Ukraine has diminished its role as a competitor. Similarly, the US government would be more inclined to approve the sending of military-grade technology through India rather than through rival China. However, along with opportunities, there are also challenges, of course. India requires a comprehensive space law to support the growth of its domestic space industry and realize its vision of expanding participation in the global space economy. As the Indian Space Research Organization alone cannot meet the increasing demand for space-based services, it is crucial to create a favorable policy environment that encourages private sector investment. These regulations should be designed to foster an ecosystem that enables small and mid-sized businesses to develop globally scalable products and services. Moreover, given India's advancements in the IT space and its pool of talented individuals, the Indian space industry holds immense potential to emerge as a prominent player in the global space arena. Having said that, this is Raj Mehta signing off from yet another episode of The Third Empire, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.